Good evening. Thank you for tuning in to AWANI Review with me, Cynthia Ng. Many economists have warned that we cannot afford another lockdown, but here we are again in MCO 2.0. Joining me on the show today is Dawn Lai. She is the CEO of Experian Information Services Malaysia to discuss two things that are crucial to running a business: cash flow management and credit management. We also want to take a closer look at some of the strategies that businesses can employ in the face of disruption yet again.
All right, thank you so much, Dawn, for coming on the show, coming on Awani Review. I would like to start with, just understanding the impact of COVID-19 pandemic and the MCO. We did see some recovery in business payment trend in 2020, which was quite surprising. Can you tell us more about the data that you're seeing in 2020?
Yes, hi everyone. We have just released the this IDTC, which is a business payment trends that is collected by Experian under our Trade Bureau services. And if you look at it, right, we have tracked over the past couple of years, and what we have seen definitely, if you look at from April, which is last year, until to date, right, in terms of the trend on the payment, we definitely have seen that the impact in terms of the MCO, really the MCO 1.0, back in actually March last year, we can see from the trend itself that the overall payment has slowed down. I think among the four different industry sector, and it gone to a certain height by the month of June. I think that was the time is due during the lockdown, and we have started to see the so-called recovery coming down in the second quarter, I would say third quarter and the fourth quarter. I think that is definitely a good sign as the economy reopened, I think over the last 2 quarters. That is what we have seen.
Okay. What are you seeing now then? Because we are back into our second MCO. Maybe businesses are more prepared and now, conserving their cash and planning ahead for any more of such disruption.
Yeah. What we have started, although just now we talk about a business recovery in the third quarter as well as fourth quarter. For the month of December, which is the one that we have just seen last month, we have started to see a slight ticking up in terms of increase of the payment trend. And with I think the current MCO 2.0, as well as some of other factors, as you can see, the resurgence in terms of the COVID-19 cases, all this, I think there is a potential downside risk. For us at this point, definitely we have to monitor further. I think we are tracking it every month on a monthly basis, and we wanted to see that what would be the impact. But generally, what we have seen is that through the last round, especially the MCO 1.1, operational constraint is definitely one of the key areas that affecting SME in terms of their payment. In terms of the readiness for us, for them, in terms of working from home structure, that actually has an impact even from a business perspective. Are they able, from their finance standpoint, making a payments to their so-called creditors? So do they have that so-called access while they are working from home? And this round with the MCO 2.0, I think there are some initial learnings from the last round of COVID-19 MCO time. We believe that it may not be as severe as the first round of the MCO, definitely. Yeah.
And how do you obtain this data, if you can share with us, and why? I understand that you have 7 industries that you hone into to look into the business payment to creditors trend. So tell us about that.
Yeah. I think Experian, we have this so-called, I think overall we are a credit reporting agency, we are an information bureau. We compile credit related informations and assist our clients to actually make a better credit decision. So one of the services that we have is called Trade Bureau Services, and this is a services that we extend it to all business corporations to allow them to share with us their customer payment information. So we have been collecting these informations, I think easily over the past 5 to 7 years. With this information, we would be able to see how our companies, I think from various different industry, making payments to their creditors. Because they are, what we have seen definitely from this trend is that there are certain industry, generally they take longer days to pay off their creditors as compared to certain other industry. Like one of the notable ones would be the construction. Typically, they take, I think, above 90 days or 100 days from the monthly trends that we have seen that to pay off their creditors. So from a company standpoint, whenever they look at these industry stats of data, it does help them to give them a certain guidance in terms of when I am dealing from a business standpoint, when I'm dealing with customer coming from this industry, I know that generally they would take maybe 3 months or 4 months to pay to me. So from a cash flow management standpoint, I think the advice to the businesses would be they have to then making sure that they have sufficient of cash to tide through their own so-called product cycle or as well as product supply chain cycle on that basis. Yeah.
The COVID-19 crisis, I think what it has done really is to highlight the importance of cash flow forecasting, because it's all about cash to tide over a period of low production or low sales, right? You gave some advice just now, but for captains of industries and business leaders, how best can they strategize to ensure not only business sustainability, but also in making timely repayments, because timely repayments, it has impact on your credit worthiness.
Yeah, I think it is definitely, I think a lot of businesses aware this so-called business world survive not on cash term, right? A lot of businesses, be it actually from big and small businesses, they survive or they are operating business on the credit terms. And when you touch on a credit terms, meaning that as a lender or as a credit grantors, they need to actually understand a bit more about your credit worthiness, right? So from a credit worthiness perspective, whether are you willing to pay? Are you a responsible person? Or do you have the ability to pay? These are generally some of the key area as a creditors or as a lender, could it be from a bank, financing company? They want us to know before I transact with you, whether this is some area of key indicators I can look at you. And definitely making timely payment is one of the key area that people looking at it, because if I'm doing a business with you, and if I know that you tends not to make payment, that would actually set in terms of lower down your overall credit worthiness, and in turn, I would say that also affecting your credit score. I think in this so-called the current world, right, many people also looking at credit worthiness, not just for company, but also credit worthiness on the individual as well. Equally, whether the business owner, how do they manage their business or how do they manage their own personal finances are equally important.
So would you say that the credit worthiness of a company and also the trend that you're seeing, the payment to creditor trend, can we look at that data and gauge economic recovery for a certain sector?
I think on a broad base insight, I think this is definitely one of the indicators to look at when businesses, there are many different areas of debt. They have debts that they have to pay to the bank. They have debts that they have to pay to their creditors. I would say that from a broader perspective in terms of insight, this would definitely contribute in terms of looking at what is the overall health or maybe financial health of a SME or business corporation. And as you start to see is that people go into this sort of cash preservations, meaning that their cash flow is tight. So there is a certain risk level there. I think that is definitely one of the good indicators to look at it, not just about payment, but also other aspects in terms of whether is there any payments default with the banks, payment default with the creditors, or if there's any adverse litigations, like if there is an increasing bankruptcy cases, that is also another indicator people should watch out for. Yeah.
Okay. Now, the Finance Ministry just very recently said that it is ready to improve on specific initiatives under Budget 2021 if necessary. We have seen some measures including financing, tax exemptions to certain industries. So with MCO 2.0 throwing a spanner to economic recovery, what help do businesses need most at this point in time?
I think from a experience standpoint, operating in this so-called credit information industry, right? What I can comment from this aspect is that definitely going digital, it is something that is important, especially is very relevant in this new normal after the COVID-19 situation. With this so-called new normal is going to stay on for, I think, nobody knows by then, right? So on that perspective, this is something that is important for the SMEs to equip themselves digitally, whether on their own business operations, in terms of how do they ensure they tap into available tools, right, in the market, online tools. But for a credit standpoint, they can tap into some of the online credit management tools, which those kind of solutions that company like Experian do offer to the market to assist SME in that perspective, to help them to better manage in terms of their customer risk, right? Because before they give any form of credit terms to their own customer, they want us to know the background, they want us to know credit worthiness, so to ensure themselves doesn't get into any kind of financial so-called difficulty situation.
Well, just one final question, Dawn, about just the outlook, for 2021. With the MCO 2.0 in place, expected 2 weeks, but it could possibly run longer than that. What is your advice? What should businesses do at this point in time, and from a credit worthiness perspective?
I think that making sure, as we mentioned, I think if I sum it up, making sure that they manage in terms of their own personal, I think company payment collections in terms of from their customer standpoint. And of course, at this stage is also a lot more businesses, as what we can see, are also doing business more selectively. And quite many of them is also what we have seen is like from used to be on a credit terms, they go back into a cash term. But that also restrict in terms of the potential business expansions area that they grow. So from Experian advice, I would say that tapping into some of the available credit management tools would help them to safeguard in terms of their own customer portfolio, but at the same time, they can still expand their business in a certain so-called calculated risk area. Yeah.
All right. Okay, well, thank you so much, Dawn, for sharing your insights. It was great speaking with you, and wish you all the best during this MCO, and hopefully we can speak in person one day.
Thank you. Yeah, it's my pleasure.
And that was Dawn Lai, CEO of Experian Information Services Malaysia. Thank you so much for watching. I'm Cynthia Ng, and we'll see you again.